Hi everyone, today I'm talking about the 6 stocks that I bought this week. Bought a little bit heavy this week because the stock market was red, and when the stock market is red, as I always say on the channel, those are the best times to buy as a long-term investor to make more money on the upside. And I followed through with them words, and I bought myself a lot of stocks this week with the stock market being red. And yeah, some UK stocks, some US stocks, and we'll go through them all today. I'll try to spend a minute or two on them. Obviously, if you want a full deep dive onto them, this won't be on today's video, otherwise covering 6 companies would be an hour-long video, and nobody wants that. So yeah, I've probably got a full video on all these companies on this list here. Now, if you do want to know when I'm buying and selling these companies in real time, make sure to join the Patreon. Link is in the description. There's also 2 exclusive videos a week on there, and I think there's over 100 videos on there now that are exclusive videos. Discord of 600 members as well as some other amazing content. And if you do want to start investing, there's some links to some brokers in the description like free trade. Join through there, you get a free share as well. Now, going on to the 6 stocks that I bought this week, it was interesting because it was a bit of a red week. Obviously last week it kind of had a bit red, but then we recovered, but this week it kind of just carried on going down and down, and that creates some really good buying opportunities, which I'm going to go for you. But just on a little side note, something that I did notice as well is like the amount of weak hands that are still in the stock market was very interesting. You know, that kind of one more week of a little bit of a red week was very interesting to see the amount of fear that was there. And also, you know, as a content creator, I kind of see probably, I'd say like 2,000 investors' opinions on whether it be the comments on YouTube or Instagram. I kind of see the general feeling of the market, and the general feeling on the market is still like very positive to the stock market, and people are kind of like, oh, these are, you know, good buying opportunities out there to go invest in stocks. But there's also still that kind of weak hands there. You know, people have been in the stock market for maybe not too long and kind of think, oh, the stock market only goes up. Why have we kind of not really started doing that anymore? And it was interesting to see in the comment section, especially with the small market caps, is like, oh, so-and-so has not done anything. I'm going to sell out of that now. I'm fed up with that company. And it's still interesting to see that there's a lot of weak hands in the market, and that we are kind of transitioning from that kind of stock market that goes up and up and up all the time to a bit more of a flat market. And it is a little bit tricky to make money. You know, one day we will go back to a stock market that will, you know, go back up in value, as it always does historically. But it was interesting to see there's still a few little weak hands out there that still kind of need to get shaken out of the market, I guess. And yeah, I mean, as a long-term investor, if a stock isn't really doing anything, you know, for the first couple of months you've been invested on it, you know, don't panic. You know, at the end of the day, you're investing this for the amount of people that I say are long-term investors for 2 to 5 years, and then they invest into a company and the company doesn't do anything for 3 or 4 months. They're like, oh, what's going on there? I'm fed up with that one. It's like GNOG. You know, GNOG at the start of this year was a company that I invested in. So the stock kind of didn't do anything, kind of went down as a lot of small market caps have done. What happens in August out of nowhere? You know, and through the month of July and August, people are like, oh, I'm fed up with GNOG. Oh, what's going on with GNOG? Oh, it just keeps going lower. Oh, it's $10 now. It's back at SPAC prices. What's going on? And then boom, 50% in one day because it got bought out. And it's just that kind of reality, is that you just got to have patience in this game. And it was interesting this week to just see that patience be tested once more. But for me, I don't mind. You know, I've been through this for many years now, and I know that at the end of the day, when I see these sort of dips, these are the best times to buy in the long term, for the long term, and get the best rewards in the long term. So I bought some companies that I thought will do very well. So I'll go through these now. So I thought I'd do 2 at once, and we'll go with the first one. And like I said, I'll just only spend a minute on them. Number 1 was HIMS. So this is my new US company, my first US company that I bought for a little bit while. Picked up some HIMS. It has been a little bit weak. I always, you know, bought at $8, and I thought, you know what, if it sneaks into this $7 range, I can average down and build a position, and that's what I've started doing. The company's absolutely smashing it financially wise, and yeah, I kind of saw it go back into that $7 range and just kept buying and buying. I'm about 9% down on this one at the moment, so if it keeps going down into double figures on percentage wise, I'll keep adding into that one. And yeah, I'm pretty well built in this one at the moment, because I didn't think it would go when I bought it from $8. I didn't think it would go, you know, bang back down to $7. So now it is doing that. I've kind of bought about 50% of my position, I think I'm at now. So yeah, I'm getting quite heavily built into that one after only holding it for a month. And the reason why I'm committing so much realistically so quickly is because I look at HIMS at $7 and think, could this go into the $6 to $5 range? And I'm like, no. In my opinion, I don't think it can go there. Realistically, could it go there? Yes, you know, anything can happen in the stock market, but I'm just kind of playing the odds a little bit here. And I think if, you know, HIMS was to go down to this, you know, $5 range, that would just absolutely bonkers. But it could always happen. It can always happen in the stock market. But I'm realistically looking, you know, how much lower can it go? And I'm happy to kind of start building it into a full position pretty quickly here with that one. And number 2, Boohoo. Obviously, this was the last video I made on Friday. You guys kind of know this one. I kind of did a big deep dive on that one. I think the video was 23 minutes long. I did buy Boohoo. I can't even remember how many times I bought it. Obviously, you guys on the Patreon will know because I post how much I buy it and how much I'm increasing my position by. But I did buy Boohoo more than once last week, and yeah, it's kind of, Boohoo's at the point now where it's building up quite a bit, and I'm actually considering now, like, it used to be my biggest position until S4 Capital came along. I also sold a little bit of Boohoo as well in that time because it did spike up a little bit, but I am kind of at the point now where I do look at Boohoo going, could it actually overtake S4 Capital as the biggest position? Potentially, because I think at these sort of prices, it's definitely crazy cheap. So yeah, I'm picking up a little bit of Boohoo at these sort of price ranges as well. Number 3, ASOS ties in with number 2, Boohoo. Obviously, because Boohoo reported their earnings, ASOS dropped off their earnings. Very much how Boohoo's been downtrending in the last few months because of ASOS's earnings. So these two kind of trade in line with each other. But yeah, ASOS had a bit of a blip because of Boohoo, and once again, kind of started buying a bit more ASOS as well. Both of them very, in particular, I think that both, massively sold off. I mean, I can't remember how much Boohoo's down from all-time highs. I think it's something like 50%, and ASOS is something very similar. So, I think these two companies in the long term, when you think about next year, or especially towards the back end of the year, you got a normal kind of party season coming up, Christmas season, hopefully a normal summer, people going travelling. You'd think that these sort of companies are back to normal really in the next kind of 12 months. I know that's something that you kind of overlook because of the amount of times we've basically gone, oh yeah, everything's going to be back to normal in so many months' time, and we still talk about it now. But I generally think that we must be back to normality in the next kind of couple of months. So yeah, I bought some more ASOS, and it's basically because of Boohoo. And number 4, a company that I've not bought for a while. The reason why I not bought number 4 for a while, which is Skills, is because I was kind of really fully built on my position. I made some good money off it. It's very volatile, it moves a lot every day. And then boom, it's fallen back down to I think it's $10 at the moment. I think it even dipped into the $9 range. And I bought some Skills, and I'm pretty fully built on the position, to be honest with you. So I wasn't really considering buying any. Normally it takes me about 6 to 12 months to kind of build a full position, and with Skills, I've been in that company from about November last year. So we're coming up to nearly 12 months. So yeah, over the course of 12 months, I've fully built a position. But as a lot of small market caps, they've been not really done anything since the start of this year, probably since February time. So yeah, Skills it's had times where it spiked up through the year, and I have taken a little bit of profit off it, which has been really good money being made on it. But yeah, to see it back down these prices, I didn't really expect it to still be here in 12 months. And I do think, like, as you can tell, I think the big deals are in small market caps, but at some point I do expect them to spike up. And I think Skills back it down at nearly SPAC prices is a cheap bargain. The thing is as well is, when it did come onto the stock market, it was a little bit of a rich valuation. But when we go 12 months on now, Skills basically has gone from something like a 30 price to sales ratio, and in about 2 months' time, it's going to drop all the way down to a 10 price sales ratio. So it has really, because it hasn't really changed much on the valuation side of it, it has really grown into its valuation now, and I think the company's performing absolutely amazing as well. Number 5 is Beyond Meat. So this one has been downtrending recently as well. Not exactly sure why. I think it's just because I made a video about it last week, and I was just saying that there's a lot of negativity out there right now, and I think that might be why what's pushing the share price down. Because fundamentally, this company has started performing pretty well again. The last kind of 12 months has been awful, as half of the company has been shut down. But now the food service part of the company has started opening back up again. It's starting showing the financials, but the share price isn't reacting off that yet. So in fact, it's going down, and it's like, okay, I'll just keep buying it. So yeah, to get Beyond Meat at even cheap prices, happy with that one. A few people always come at Beyond Meat and say, oh, but the valuation's really high. It is a little bit high, I do agree, but the thing about that is that you are buying the market leader, you are buying one of the biggest TAMs out there. The kind of food service is massive because everyone has food, whether you want to or not, you have to have food. Everyone in the whole world needs food every single day, so it's one of the biggest TAMs out there, and they are the market leader. But the thing as well is what people don't take into consideration is that they don't consider, okay, what a lot of people do Beyond Meat, and they make the mistake of taking the company and valuing it off a lot of the metrics for this year. But really what you should be doing with Beyond Meat is value the company off when it recovers the foods part of the company, because we are literally a couple of months off that happening. and people keep valuing Beyond Meat when it's had a bad year. So I always think that's very unfair from Beyond Meat's point of view, and like I say, I think the company's recovering quite well now. Number 6, Corsair. So I did buy some more Corsair. This is a company that I'm trying to break into my top 3 positions now. I've started buying this company, I think, for about 6 months now. So yeah, I am thinking about making this into a top 3 position. I don't think it probably has as much upside as a lot of these companies on this list, but when I look at the risk to reward, I feel like there's not much risk there, and because there's not much risk there, I'm happy to kind of build that into a top 3 position. They've just recently launched a monitor as well, so that expanded the range massively as well. So yeah, Corsair, I'm happy to just keep buying that one, and yeah, for me, the risk to reward is, you know, you're not taking on much risk for the reward that you would get with this one. So yeah, I'm happy to keep building that one up, and I will carry on building that one up through the next couple of months really. So yeah, those are the 6 stocks that I bought this week. Let me know in the comment section what you bought this week. I'm always interested to hear, and as always, hit the like button, subscribe, and I'll see you in the next one.